Welcome back. This is stock market chart analysis for Friday, January 28, 2022. Let's look at the charts. First one is the S&P 500. This is a daily chart, and this one had a nice bounce or reversal day on Friday. Bounced out support that 40, what was that? 42.90, and we saw a big bounce pushing above major pivot points, very strong resistance, and closed above the 5 day moving average. Right, it's right at the 200-day moving average. So big resistance between today's Friday's close, 44.30 and 44.50. I expect lots of very strong resistance here. Be nice if we gap above that and use that as support. Otherwise, I think 43.75 or that 5 day moving average should hold. Trading around this area, I would expect that before pushing higher. I think it was a very nice day on Friday. For the record, I am long the S&P 500 via the UPRO ETF, and I'm just playing this range. I really wanted to just wait and buy about 44.50, but today's or Friday's price action was very bullish. So I ended up buying some shares and decided not to wait until trading about 44.50. My stop loss, my hard stop loss, is below Friday's low, somewhere down here. That's my hard stop. My discretionary stop will be around the 5 day moving average. Discretionary means it's all based on price action, like real time price action. Hard stop is just there. I mean, if we dip below that on Monday, my order gets executed automatically, no questions asked. Let's quickly take a look at the 5 minute chart. This is the end of the day. This was the end of the day. In about the last hour and a half, we just saw this big rally with no pullbacks, like nothing. I was watching it. I really want to get involved here. But after this big move, I expected some type of consolidation or a pullback, but that pullback never um, occurred. So I ended up buying at the end of the day and after hours. So my buy point was basically up here during aftermarket hours or extended hours. So this move was about 100 points. Very difficult to ignore. Take a look at the Nasdaq 100. For the record, also, I am long the Nasdaq 100 via TQQQ ETF. This one, very similar pattern to the S&P 500. I'm just playing the range. I mentioned in my previous video between 14,000 and 14,400, and it did move above that 14,400. So I ended up buying at the end of the day also. Why? Big reversal, undercut this low, quickly reversed higher, closed very strong above that 14,400 and above the 5 day moving average. My stop loss for now, hard stop loss, worst case scenario, is below to Friday's low, but my discretionary stop is around the 5 day moving average. So I expect to do, any probably higher on Monday. Who knows? But definitely, I expect that 5 day moving average to hold above that. If it doesn't, then I will consider liquidating my position once we start trading below that. But it looks very bullish. Resistance definitely is going to be that 10 day moving average and around this area. So I don't think it's going to happen on Monday. I think it might pull back a little and then try to push higher, but very difficult to ignore Friday's price action. And let's just take it session by session. I'll take a look at the Dow Jones Industrial Average. This one is still in this range, 33,750 and 34,750. So that's a 1,000 point range. Very bullish day also. Very similar to the previous two indices that I just mentioned. This one closed right at that 10-day moving average. So if this one can move above that 10-day moving average and above this level, I think it will be very and the 200-day moving average. So expect lots of resistance up here. If we open lower, there will be lots of resistance. We open higher, we can use that as support, and don't be surprised if we start pushing above these uh, declining moving averages. Now let's take a look at the Philadelphia Semiconductor Index. This one, similar intraday pattern to the other indices, sold off and big reversal and closed near the highs of the day. But the only difference, this one was a little different. One divergence that I don't like is that this one dipped below Monday's low. Yes, found support here, but it's still under the 5-day moving average. So this one I will not get excited until I see it start trading above that 5-day moving average. I don't know if this one's gonna follow the other indices, or maybe this one's gonna decide to just stay down here for a while and end up breaking, dipping below this low and affecting the other indices also. But this one is very difficult to trade. I mean, you don't really see any type of price consolidation. Yes, this one has been very volatile, just like the other indices. But the other indices are leads that we're trading in a range. Versus this one, like I said, there's like really no range. But we'll see. We'll see how it reacts once it reaches that 5-day moving average. And now, small caps, Russell 2000, IWM. This one, very similar pattern to the Philadelphia Semiconductor Index. It dipped below what was been doing that, dipping below Monday's low. And today it dipped below yesterday's or the previous day's low also. But it was very encouraging. It was a big bounce. And now it's right under major or very strong resistance. 196, 197. Is it going to get there? And it's also is going to coincide, that zone is coinciding, that area here is going to coincide with the 5-day moving average. So Monday, if we try to push higher, and if it succeeds and closes, say, about 197, that would be very, very bullish. If, however, we start finding resistance there, I would expect, some consolidation around here. But this one has been the weakest of all the indices, so this one is really hard to trust. We'll take it session by session. I don't know if really this one means anything, if it's going to start following all the other indices. It is very difficult to ignore this candle. You call it a hammer, I call it a rocket, and we'll see if we can start pushing higher from here. Thanks for watching. Thanks for stopping by. I hope you learned something. And good luck trading on Monday.